Hey, it's Stuart. So I've been asked, what do I think about investing in townhouses or apartments in secondary suburbs? So, sort of middle to outer ring suburbs as opposed to or compared to blue chip locations. It's a great question, and one I've written about recently on the 29th of May, 2024, where I sort of spoke about if you can't, or address the question, if you can't afford to buy house, a standalone house in a blue chip location, what alternatives do you consider? Do you go and buy an apartment in a blue chip location, or do you buy a house in a secondary location, or in fact, do you think about buying a villa unit or some other opportunity like that that's going to meet your price point? And I mentioned that one, and I'll include the link in the comment section or description of this video. But I mentioned that one because it's kind of a similar sort of methodology or approach to, are apartments or villa units in secondary locations good value? And the person that asked the question is theorizing that because they're relatively affordable, particularly for singles, couples, smaller families, maybe they're going to be more affordable than houses and therefore benefit from increased demand. It's interesting, I think, and I wanted to sort of record my thoughts on this because I have a thought, but I don't have really any evidence to back up my thesis behind this thought, or at least I haven't been able to find the evidence yet. I haven't looked closely because I know it probably doesn't exist. But I'm concerned at the moment that the relative value of property in blue chip locations compared to secondary locations. And when I'm talking about secondary locations, I'm talking about locations that take a lot longer to travel to, that don't have the level of amenity that inner city locations offer in terms of schooling, healthcare, shopping, entertainment options, just that sort of vibe that a good well-established blue chip suburb will have or will offer. And, these secondary locations tend to be sort of 30 plus kilometres away from the CBD as a sort of general observation. And when you look at what houses cost in those locations and you compare that to what houses cost in blue chip locations, I can't help feeling that either the blue chip properties look to be pretty good value relative to those other properties, or those other properties look expensive. And it's something that I'm a bit concerned about. I don't think that they're quite cheap. You can spend more than $1 million for a house in a location that, offers you a house, but, doesn't have the same amenity that a blue chip location will have. And $1 million is pretty expensive, of course, and often north of $1 million. Now, if you look at the other factors that you want to think about, for apartments and so forth, the other thing that apartments offer you is affordability, but they're better suited to areas where there is substantial amenity, where land values are very high, but the location offers substantial amenity. And in that situation, instead of having a block of 600 square meters, let's go and build 10 apartments on that 600 square meters. And then everyone notionally has sort of 60 square meters of land value, if you like, but they can afford then to live in a location that offers so much amenity. When the amenity reduces, and it does, the further you move away from capital cities, particularly in Australia, um, the value proposition around apartments, to my mind, just doesn't really work. So a very long-winded explanation, I think, to your question. It's a good one. But no, if I was going to go into secondary suburbs, I would want a house. I'd want that strong land value component. And I want to benefit from that capital growth. more affordability tends to suggest that you're in a location where supply can increase and supply is abundant. Affordability is kind of the enemy of capital growth. When something's relatively unaffordable, then the people that have more money, more wealth, higher income, higher growths in family income, inheritances, these sorts of things, they can afford to always pay more for that property, and that's where you're going to get the capital growth. So again, a long-winded answer. I will include the link to the blog in the description, the video description, so you can have a look at that. And hopefully that gives you some food for thought. Cheers.